Welcome back to the channel, guys. In today's video, I want to discuss a new symphony that I created, and it's related basically to the FIRE movement and the ability to check out of the workforce at a young age. And so, really, it's an income focused symphony that I created. You can see I titled it "FIRE Fund Beat the System." It just basically, I've always been attracted to people, as you guys know who follow this channel, to people who have gone an alternate route and been able to beat the system. And so what do I mean by that? People who don't necessarily go to a job every day for 30, 40, 50 years and then retire at 60, 70, 80. And that's that. People who are, and a lot of times these are real estate investors. That's why I gravitated to the Kiyosaki's and the Cardones and others. But people who, through real estate, oftentimes are building a business, have been able to attain a certain degree of financial independence. So I watch a YouTube channel. It's a very good channel, Dividend Bull, and I'm going to bring that up here. Let's go. And basically, the title is "This is the lowest amount to live off of dividends." Need to live off of dividends. And what the premise of the video basically is him saying, well, listen, if you go to a traditional financial advisor, they're going to say you need 2 million, 3 million, 4 million, depending on your age, because they're going to look at things like Johnson & Johnson as a dividend payer, or the SPY, things that are paying 2-3%, maybe 4%. But is there anything else out there that would enable someone, let's say with 500,000 or 700,000, to attain the FIRE lifestyle? And he analyzes different asset classes. At the end, he really talks about covered call ETFs, which are a newer ETF. QYLD is probably the most well-known. So I want to play a little bit of the video and then showcase a symphony that I created for someone, including myself, who would be looking to do this. So let's just get rid of my. I called it the FIRE Fund / Beat the System. You see the annualized is 31. So let's just kind of go through it here. So you see here PTY. That is PIMCO fund, a bond fund. Then we're going down to NUSI. NUSI is a covered call ETF. We have SVOL. That is by a company called Simplify. They're I think fairly new in the ETF space with their releases. And they some really interesting options-based ETFs. This one is based on volatility. We go down, we have PFFA, preferred shares, another Simplify, a managed future Simplify. And then we go down to, let's see, SPYI, which actually Garen Phillips interviewed this company, and I believe that they started the original QYLD or part of that in some capacity. So we go down to another PIMCO high income fund. We go to JEPI, another well-known covered call ETF, XYLD, another. And then we go down to more mortgage REIT, PIMCO, another PIMCO. And then this is a fund, Handle by Strategy Shares, which is targeting a 7% yield. Then we have BDC, again, business development companies, also are generally higher yield. NetL is a REIT fund that holds triple net leases. So we're going down QYLD, most famous. And then you have mortgage REITs. So you have REM, RYLD, another covered call. PFF, that's the second of the preferred shares. The other one is PFFA, another Simplify fund. And you can see that looking to the right here, this is what I call my laundry list style of symphony. So these aren't complicated logic wise. This isn't like what you're going to see in the Discord or in the Reddit or in the Slack, where there's like nested conditionals, like if this then this, and then if this then that. Very longer complicated logic. This is like, I'm going to hold these things probably in perpetuity, and I'm going to rebalance once a year. Now, you could put a threshold if you didn't even want to do that. Put a super high threshold, so you would be forced to rebalance. But it's like a very simple strategy, and yeah. So it's let me go back up here. Its back test doesn't go back too far. The reason being is I believe SPY and CTA, some of these funds here weren't introduced in 2022. So you can't really go as a long back test. But the purpose of this, I would feel, let's say if you balance this out, and that would be a cool addition for a composer to actually in a symphony to show the dividend yield of that particular symphony. But let's say it's set between 7 to 8%, and you're taking that as income. If this symphony remained flat over 5, 10, 15 years, and almost like almost annuity-esque, where think about it, when you give an insurance company or you purchase annuity, you're giving a big pile of cash for an income stream. So as long as this wasn't a capital destroyer, so to speak, let's say you put 100,000 and in 10 or 15 years you have 100,000, but you've been living off a 6, 7, 8% distribution. Now on 100,000, you're not going to necessarily live on that. But you start putting 3, 4, 5, 6, 700 in something like this, it gets a little bit interesting. So yeah, so that's just something I put together the other day, and it'll be fun to track. Fire Fund, Beat the System. And then over here in the Discord, I had a question from a guy here, and he actually was, I asked him, I always ask people when they talk about composer, how did you come across it? And he said, I watched your videos. So it's pretty cool to see that, like, I've done a bunch of videos on composer, and I've even one of their employees one time, I was asking, like, how did you come across composer? And they're like, oh, I saw one of your videos. So, it's cool because some of these videos have gotten like, 15, 20,000 views. So it's definitely been seen by a lot of people, which is cool. But anyway, so he asked here, do any of these long, complicated symphonies outperform, or are the simple ones better? I've been browsing the Discord, and some are very long, which worries me regarding breakdowns. So this is a great question. I think that the answer that a lot of people would reflexively say is, oh, the simple ones are better. Like, it gets too complicated. It's overfit. It's hindsight bias. It's, but it's hard to really answer that as a definitive fact that simple is always better. I mean, look at, some of these quant funds like Rentec and DE Shaw. And so I don't know how long the code on some of their strategies are, but I don't know if they're just like super simple, like if SPY is above its 200-day moving average, own SPY, else BND, bond fund. Maybe there's some of that simplicity. I mean, it's funny, I'm just showing you a simple symphony that I created, but that's what I call a laundry list symphony. It's not necessarily like a logic-based symphony that I think he's referring to. So what I wanted to do here is I control 2 composer accounts, my main one and this smaller one. The main one is about 240,000. The smaller one has about anywhere from 34 to 36,000, depending on the day. And what's cool about this one is this one focuses primarily exclusively on a lot of the Discord strategies, that are there. And so this one is a lot of Garen Phillips, Derek Nielsen, Eric Snellman, Cody Haas, Jae-Wong Jung. And so I just wanted to kind of show, first of all, how some of these are doing. Let's see if I can lower this a little bit. And then answer the question that he asked there. So you can see here's a Dippy Cutie version 1.4 that's up a little bit. SPY driven allocations up a little bit. Risk on, risk off, it's down slightly. I think that was one of the pre-built symphonies. And then you have the Manhattan Project, which there's different permutations. This one's up, pretty significantly here for its value. SPY Energy Chips and Commodities. That was one of the earlier Slack ones. Jae-Wong Jung, who shared some of these recently in the Discord. This one's down a little. This Manhattan project's down slightly. This version 2.2 is up $74. This one's up pretty significantly. The Leverage Light 2.1, it's up over $300. We're going through the Manhattan project. TQQ for the long-term version 2 is up. Another J-Wong is up. So you can see a lot of these Discord strategies are up, from the time that I allocated capital. This one's down big. This is the one, the SPY versus RJA version 3.6. That one's down, good $600-700. Another Derek strategy, New Apollo is up. This is one of the composer ones, I believe, Sector Momentum, that's also up. This is my Balanced Alpha, that's down slightly. So just kind of scrolling through. This one, the Dippy Cutie version 3 is up nicely. Daily Profit Harvesting this one on my own. Franken Symphony is up. Let me just do a couple more. The 1.1 Manhattan project is up pretty good. SPY, DBC, Dippy Cutie version 1 is up. So just wanted to go through it. And so let's just take like one of Jay Wong's strategies, which I believe is, let's take this one here. Let's pull this up. And I believe these were shared on the Discord. So this one is fairly short here, right? I mean, it's got a couple, it's seeing BND over BYL, cumulative return. Generally, I think starting here, if BIL, which is short-term bonds, are higher, there's generally, people are panicking and selling long duration and such, or longer duration. And I'm not going to get necessarily too much into it, Vita, but it's pretty like short and basic for compared to a lot of the others. And this one, version 2.1, is simpler, but it's up pretty significantly. You can figure out the percentage basis, but it's up at $300 on 11. So that's pretty nice. And some of the more complex ones, some of those are also up. Some of the Manhattan projects, like this is a one that is complex and it's down 700. So I don't know if the length of the code, so to speak, or the complexity. I mean, I think your hesitation is well placed. Something to think about it. If you're having a Symphony with a long code, even though it's considered no code, I don't know what you'd call that, the logic or long logic. And let's say, and this happened to me one time, let's say one of the ETFs is discontinued. Well, then that Symphony doesn't trade. So you have to go in manually and find out every place in the logic where that ETF appears. And in these longer Symphonies, that can be time consuming and pretty difficult, to find. I mean, if you just take this one here, let's just pull up. And I think this one used to be DB or RJA and then had replaced with DBC. So, this one, I'm just scrolling down, still scrolling. I mean, so you can see, still scrolling, still scrolling, still scrolling, still scrolling. So it's a longer series of logic than Jay Wong's. And Jay Wong's up and that's down. Does that mean long term that that's going to happen? I mean, in 5 years, are only the simpler ones going to outperform, or only the more complex going to outperform? It's hard to really say that. So I would say, you got to look at some of the back tests. You got to look at some of the logic as well. And, sometimes some of these you can actually talk to some of the creators and see their rationale behind it, what they're trying to attain, so on and so forth. So, but I hope that helps a little bit. And just, again, it was kind of cool to share the smaller of the two accounts. So you can see that this one is more Discord, Reddit, Slack based. and it's with real capital, not just back testing. So again, this is an account 3 years from now. It'll be fascinating, in my opinion, to see what its account value is at. But anyways, that's it for today. I appreciate you guys tuning in. Any questions, comments, feel free to ask. Take care.